Hey, crypto enthusiasts, and welcome back to Boni's Life. I'm your host, Boni, and if you're watching this on June 8th, 2025, you're about to get the most comprehensive crypto market analysis that could literally change how you trade this week. We've got Bitcoin flirting with massive resistance levels, Ethereum setting up for what could be an explosive breakout, and some institutional moves that are absolutely reshaping the entire landscape of digital assets. Now, before we dive into the technical analysis that's going to blow your mind, let me just say this. If you've been following traditional financial news and wondering why crypto seems to move independently of everything else, you're about to understand exactly why. The data I'm about to share with you comes from the most credible sources in the industry. And I've spent hours analyzing charts, institutional reports, and expert predictions to bring you insights that most retail traders simply don't have access to. So grab your coffee, open up your trading platform, and let's dissect what's really happening in the crypto markets right now. And hey, if this analysis helps you make better trading decisions, smash that like button and subscribe because we're building a community of intelligent traders here, not just hopeful speculators. Let's start with the elephant in the room. Bitcoin. As I'm recording this, Bitcoin is trading around $105,135. And I know what you're thinking. Boni? That sounds expensive. But here's the thing that most people don't understand about Bitcoin's current price action. We're not just looking at a number on a screen. We're looking at the culmination of institutional adoption, regulatory clarity, and technical patterns that are setting up for what could be the most significant price movement we've seen in months. The technical analysis on Bitcoin right now is absolutely fascinating. Looking at the daily chart, we can see that Bitcoin has been forming what technical analysts call a bull flag pattern. Now, for those of you who might be newer to technical analysis, a bull flag is essentially a brief consolidation period after a strong upward move, and it typically signals that the upward trend is going to continue. The flagpole of this pattern started from the April lows, and we've been in the flag formation for about a month now. What's particularly interesting is that Bitcoin is currently trading above its 34-week exponential moving average at $2,501. And it's also holding above the 200-week simple moving average at $2,450. These are not just random numbers. These are dynamic support levels that institutional traders watch religiously. When Bitcoin holds above these levels, it tells us that the long-term trend remains intact. But here's where it gets really interesting from a technical perspective. The relative strength index on the 4-hour chart moved from 58 to 65 between 8 a.m. and 4 p.m. UTC on June 7th. Now, an RSI of 65 is approaching what we call overbought territory, but it's not quite there yet. This suggests that while there's bullish momentum building, we're not at the point where we'd expect an immediate reversal. The moving average convergence divergence indicator, or MACD as we call it, showed a bullish crossover at 10 a.m. UTC on June 7th. For those of you who trade based on MACD signals, this is typically considered a buy signal, especially when it occurs during an established uptrend. The combination of these technical indicators suggests that Bitcoin is building momentum for another leg higher. Now let's talk about the price targets that have the entire crypto community buzzing. The analysts at Bitfinex, and these are some of the most respected technical analysts in the space, are projecting that Bitcoin could reach the $120,000 to $125,000 range as early as this month. That's not just wishful thinking. That's based on technical analysis combined with fundamental factors that we'll discuss in a moment. Tom Lee from Fundstrat, who has been one of the most accurate Bitcoin analysts over the past few years, is even more bullish. He's targeting $150,000 to $250,000 by the end of 2025. Now, I know that might sound astronomical, but when you consider that Bitcoin has gained over 50% in the past year alone, these targets start to look more reasonable. The key resistance level that everyone is watching is around $109,000. If Bitcoin can break through this level with conviction, meaning with high volume and sustained buying pressure, then we could see a rapid move toward those higher targets. The technical setup suggests that once we break above 109,000, the next major resistance isn't until around $115,000. But let's be realistic about the risks here. Bitcoin is currently testing what's called the 26-period exponential moving average, which is sitting right around $105,000. If Bitcoin breaks below this level, we could see a retest of the 50-period exponential moving average, which is down around $97,000. That would represent about an 8% pullback from current levels, which in crypto terms is actually quite normal and healthy. Now, let's shift our focus to Ethereum, because what's happening with ETH right now is absolutely critical for the broader altcoin market. Ethereum is currently consolidating around $2,500, and it's been holding this level despite some pretty significant market volatility. The key thing to understand about Ethereum's current position is that it's sitting just below a major resistance cluster. The technical analysis on Ethereum shows that we have resistance at the $2,800 level, which coincides with the 50-week simple moving average. This level has been acting as a ceiling for Ethereum's price action, and breaking above it would be a significant bullish signal. According to the analysis I've been studying, if Ethereum can reclaim the $2,700 to $2,800 zone, we could see a rapid move toward $3,000 and potentially even higher. What's particularly encouraging for Ethereum bulls is that daily active addresses reached 1.2 million on June 7th. That's a parabolic surge in network activity, and it suggests that there's real fundamental demand driving Ethereum's price action, not just speculation. When you see network activity increasing alongside price consolidation, it often precedes a significant breakout. The Ethereum ecosystem has also been benefiting from what analysts are calling the ETF effect. We've seen $750 million in institutional inflows into Ethereum-related products, and some analysts are predicting that ETH could hit $6,000 if these favorable macro trends continue. That would represent more than a 100% gain from current levels. From a technical standpoint, Ethereum is trading above its 34-week EMA and the 200-week SMA, which are both acting as dynamic support. The price structure remains intact as long as Ethereum holds above these levels. However, the 100-week SMA at $2,610 is acting as resistance, making the $2,700 to $2,800 region a critical battleground. Now, let's talk about the fundamental factors that are driving these technical setups, because understanding the why behind price movements is just as important as understanding the what. The Federal Reserve's monetary policy is playing a huge role in crypto market dynamics right now. According to CME FedWatch data, there's a 97.4% probability that interest rates will remain unchanged at the upcoming Federal Open Market Committee meeting. This might seem like bad news for risk assets like crypto, but here's the nuanced view that most mainstream financial media is missing. The fact that rates are staying put means we're not getting any hawkish surprises that could strengthen the dollar and put downward pressure on Bitcoin and Ethereum. Additionally, The probability of a rate cut in July is sitting at 16.3%, which is actually higher than many people expected. The relationship between Federal Reserve policy and crypto prices is complex, but here's the simplified version. When interest rates are low or when there's expectation of rate cuts, investors tend to move money into riskier assets like crypto because the opportunity cost of holding cash decreases. Conversely, when rates are rising or expected to rise, money flows out of risk assets and into safer investments like treasury bonds. President Trump's recent comments about wanting the Fed to cut rates by a full percentage point have added another layer of complexity to this dynamic. While the Fed typically moves in quarter-point increments, Trump's pressure for more aggressive easing could influence market expectations and, by extension, crypto prices. But here's where things get really interesting from a regulatory perspective. We're seeing unprecedented progress on crypto legislation in Congress. The House Financial Services Committee is expected to mark up the Digital Asset Market Clarity Act, also known as the Clarity Act, and the Senate is close to passing its stablecoin bill with what Senator Ruben Gallego describes as massive bipartisan support. This regulatory clarity is absolutely crucial for institutional adoption, and we're already seeing the effects. JP Morgan Chase, the largest bank in the United States by assets, just announced that it will begin accepting Bitcoin exchange-traded funds as collateral for loans. This is a seismic shift in how traditional finance views crypto assets. When JP Morgan's CEO Jamie Dimon, who has been historically skeptical of Bitcoin, says, "We'll support Bitcoin since clients want it," you know something fundamental has changed. The JP Morgan policy will initially include BlackRock's iShares Bitcoin Trust, and it will be available to both trading and wealth management clients globally. This isn't just symbolic, it's creating real utility for Bitcoin ETFs and establishing them as legitimate financial instruments that can be used as collateral just like stocks or bonds. Speaking of institutional adoption, let's talk about Michael Saylor and MicroStrategy, because their recent moves are absolutely mind-blowing. Saylor's Bitcoin reserves have now hit $61 billion. Let me repeat that, $61 billion worth of Bitcoin. Their most recent purchase was 8,705 Bitcoin at an average price of $106,495 on June 2nd. Now, some critics are worried about the concentration risk of having so much Bitcoin held by a single entity, and there are legitimate concerns about what would happen if MicroStrategy ever had to liquidate their position. But here's the thing. Saylor's strategy has generated over $20 billion in profit, representing a 50 to 68% gain above their average buy-in price. This isn't reckless speculation. It's a calculated bet on Bitcoin's long-term value proposition that has paid off handsomely. The institutional adoption story extends beyond just MicroStrategy. Survey data shows that 59% of institutional investors now allocate at least 10% of their portfolios to Bitcoin and digital assets. Bitcoin ETFs now hold over 1.13 million BTC, making them among the largest collective holders of the digital asset. These aren't retail investors buying a few $100s worth of crypto. These are pension funds, endowments, and family offices making strategic allocations. But we can't ignore the geopolitical factors that are also influencing crypto markets. The ongoing feud between President Trump and Elon Musk has created some interesting market dynamics. When news of their public disagreement broke on June 7th, we saw Bitcoin drop 1.2% to $68,500, Ethereum decline 0.8% to $3,200, and Dogecoin fall 2.5% to 14.5 cents. The Trump-Musk situation is particularly interesting because both figures have significant influence on crypto markets. Musk's impact on meme coins like Dogecoin is well documented, while Trump's crypto-friendly policies have been supportive of the broader market. The fact that their personal disagreement can move markets shows just how sentiment-driven crypto can be in the short term. There's also the broader US-China trade relationship to consider. With ongoing tariff discussions and geopolitical tensions, crypto often serves as a hedge against traditional financial system instability. The correlation between Bitcoin and the Nasdaq remains strong at 0.75 on a 30-day rolling basis. But during periods of geopolitical stress, we sometimes see crypto decouple from traditional markets as investors seek alternative stores of value. Now let's get into the trading strategies that could help you capitalize on these market conditions. First and foremost, the key levels you need to watch for Bitcoin are $109,000 on the upside and $97,000 on the downside. If we break above 109,000 with volume, that's your signal to consider long positions targeting 115,000 and potentially $125,000. For Ethereum, the critical level is $2,800. A break above this level with conviction could trigger a rapid move toward $3,000 and beyond. The risk-reward setup on Ethereum looks particularly attractive right now because the downside is relatively limited, while the upside potential is substantial. One strategy that's working well in the current environment is what I call institutional following. This involves monitoring ETF flows, whale wallet movements, and corporate treasury announcements to gauge where the smart money is moving. When you see consistent inflows into Bitcoin ETFs, combined with companies like MicroStrategy continuing to accumulate, it suggests that the institutional narrative remains intact. Another approach is to use the correlation between crypto and traditional markets to your advantage. When the Nasdaq is performing well and risk appetite is high, crypto tends to outperform. Conversely, when traditional markets are under pressure, crypto can sometimes offer diversification benefits, especially during periods of currency debasement or geopolitical uncertainty. For those of you who prefer a more technical approach, the current market structure suggests that we're in what's called an accumulation phase. This is when smart money is quietly building positions before the next major move higher. The key is to be patient and wait for clear breakout signals rather than trying to catch every small move. Risk management is absolutely crucial in the current environment. While the long-term outlook for crypto remains bullish, we could see significant volatility in the short term. Position sizing is critical. Never risk more than you can afford to lose, and always have a plan for both bullish and bearish scenarios. One thing I want to emphasize is the importance of staying informed about regulatory developments. The crypto market is increasingly driven by policy decisions and regulatory clarity. Following the progress of bills like the Clarity Act and monitoring statements from Fed officials can give you an edge in anticipating market movements. Looking ahead to the rest of June and into July, there are several key events to watch. The Federal Reserve meeting will obviously be important, but also keep an eye on any developments in the Trump-Musk situation, progress on crypto legislation, and continued institutional adoption announcements. The supply and demand dynamics for Bitcoin remain incredibly bullish from a long-term perspective. With 95% of all Bitcoin already mined and institutional demand continuing to grow, the fundamental case for higher prices remains strong. The question isn't whether Bitcoin will reach new all-time highs, but when and how quickly it will happen. For Ethereum, the upcoming developments in the ecosystem, including potential ETF approvals and continued DeFi innovation, could serve as catalysts for the next major move higher. The network activity we're seeing suggests that there's real utility driving demand, not just speculation. As we wrap up today's analysis, I want to leave you with this thought. The crypto market is maturing rapidly, and the strategies that worked in previous cycles might not be as effective going forward. The key to success in this new environment is to combine technical analysis with fundamental understanding and to always be aware of the broader macro environment. The targets we've discussed today, $125,000 for Bitcoin and $3,000 for Ethereum, aren't just random numbers. They're based on technical analysis, institutional adoption trends, and fundamental factors that are reshaping the entire crypto landscape. Remember, successful trading isn't about being right all the time. It's about managing risk and positioning yourself to benefit from high probability setups. The current market structure is providing exactly those kinds of opportunities for traders who are willing to do their homework and remain disciplined in their approach. That's a wrap for today's crypto market analysis. If this deep dive helped clarify the current market dynamics for you, please hit that like button and subscribe to Boni's Life for more intelligent crypto analysis. Drop a comment below and let me know what you think about these price targets and whether you're positioning for the potential breakouts we discussed. Until next time, keep learning, keep trading smart, and remember, in crypto, knowledge truly is power. This is Boni signing off, and I'll see you in the next episode where we'll be diving even deeper into the technical setups that could define the rest of 2025. Stay profitable, everyone.